What's going on, YouTube? Stocks by their numbers. Welcome back. Very quick update here on Tesla Inc., ticker symbol TSLA here, listed here on the NASDAQ. Now, I know this is a very popular stock. Of course, the last time we looked at the company, I mentioned that we were trumpeting, and obviously, in my opinion, it was extremely overvalued in the numbers like it's been for years and years. And usually, I hate to call you guys out, but usually the only people who will disagree with you when you say that are people who own shares, right? Because that's just not what they want to hear. They don't care that the stock is, trading at ridiculous multiples that cannot be compared to basically any other publicly traded company, except for NVIDIA, of course. So those are our two brand name, fake, overinflated tech stocks right there, Tesla and NVIDIA. And the reason why I say it like that, again, I want you to understand, I am not a hater. I'm not sitting here bashing Tesla every day because I never bought it years ago. It's nothing like that. It's nothing like that. Again, there's a way to look at and analyze the stock and the value of the company. And any way you cut it, Tesla is overvalued. And again, to reiterate, any potential metrics or points that you would look at to try to convince me that it is not overvalued, again, you are then better off buying 80 or 90% of all of the undervalued stocks that we looked at here on this channel. Because if you can justify it for Tesla, then obviously, again, 80, 90% of all the companies and symbols that we looked at here on this channel since inception should be trading at ridiculously higher multiples than they're trading right now. But again, that's only if you can convince me that Tesla belongs up here at 240, okay? So, also, remember, the company missed earnings revenue 3 quarters in a row, right? So they pulled it back to 101 and then rallied it to 277 the whole time the company missed revenue 3 quarters in a row, right? Just keep that in mind. But again, basically, I'm not just bashing the company in the numbers because last time we looked, we saw this gap up here. So we have a gap fill that has to happen at about 81, 87. So again, when they pulled it down here, you didn't want to do it immediately? All right, fine. See the way they rose it back up here before chunking it up for no reason here after an earnings miss? Earnings miss. So what should have happened, in my opinion, is it should have rejected and continued downward just to fill the gap. And then again, if you want to take it from 81, 87 after the gap fill back up to $160, $184 a share, whatever. It doesn't matter because at least in the chart, it made sense, right? That's what I'm saying. You have to meet me on one side of the fence. You can't tell me the numbers don't add up and it's never going to sell off. And you also can't show me that there's a gap fill that has to happen that you're just not letting happen. Because it will happen one day. It will happen. The reason I'm speaking about it like this, again, to reiterate, in my opinion, is because I feel that they are propping and keeping up these markets. So in my opinion, the SPY, the NASDAQ, the Dow, all of these indices should be significantly lower than where they are right now. And they're keeping like this stable uptrend, market when everything really should be selling off. So, the economy, our reality, you and I, is one way, and they're trying to show us that, oh, no, everything's fine, economy's growing, companies are growing. So, I bring that up because when the rug pull does happen, and of course we all know it will happen one day, when the rug pull does happen, the companies that are going to take the biggest hits are the ones that are massively overinflated. They're going to chunk down the most. So your Teslas, your NVIDIAs, they're going to completely shit the bed because they should be nowhere near the prices that they're currently trading at right now. Again, that's just my opinion. But again, it's kind of simple logic and common sense, right, if you look at the numbers. So obviously, could go either way here with Tesla. However, we go back the last couple of months since the last earnings report. Again, they miss on revenue. But again, the stock goes from 160 to 277, as it does. But more importantly, ascending wedge, and you see here, we basically hit our apex and the stock has broken down and is now dropping here 241.5. And we have a gap up right here at about the low 235s, and then another gap up here on the way 222, right? So chances are that's probably where the stock is going to go, right? First stop's going to be 235 here in the immediate short term, and then the high 221s, the low 222s. That's technically where it should drop to, breaking out of this descending wedge. Now, are they going to bring it all the way down to, in my opinion, where they should, which again is that gap fill? Chances are probably not, right? I'm sure all the young people and all the traders are probably going to make it their business to step in on Tesla calls and shares when it does pull back, 7, 8, 10% from where it is now. So, again, I'm not exactly sure when this gap fill is going to happen, because in my opinion, it really should have happened back here. But if it does follow this trend, then we could have a break here over time. And, again, this is only mid-September, so this is only inside of like the next, 7, 8 weeks. But technically, it really should come down here. It should sell off and break this trend line, get into this descending wedge, fill the gap as it hits the apex, and then explodes. Now, the problem is, if that does happen, obviously, if you're a shareholder, you don't want to hear that, because we're talking about like a 66% drop from where we currently are, right? But again, that is why we always keep cash on hand, right? So even if like you're only playing Tesla, if you have, 80, 90% of your capital invested into Tesla shares, like that's fine, it's your money, do what you want with it. But again, we always keep cash on hand, so that if the stock, breaks a pattern like we're seeing here, like our ascending wedge, we can say, okay, now it's going to pull back, whatever, $10, $15, $20, so we can step in. And we can buy, 1, 2, 5 puts and make money on the downside while we're still holding our shares. And on the flip side also, if you, consistently add liquidity to your account and always have cash on hand, then if it does happen to really break down with the rest of these markets here, then you can say, okay, we got this gap fill down here at 82, the stock's pulling back, now it's back at 100 or sub 100, it's in the 90s. Hey, guess what? I have cash on hand. I'm going to buy more shares down here at 80, 90 bucks, right? So that is why really, whatever is going on, whether you're a bull or a bear here on Tesla, again, the lesson is to always have cash on hand. And again, more importantly, with the markets here trying to remain stable and with them pumping it up, again, in my opinion, acting like everything's okay when it's really not. Again, I just want to reiterate, I'm not hating on the company, but if and when the rug pull and the big chunks down do happen in the markets, it's going to be your Teslas, your Nvidias that start chunking down and start to take the biggest losses the quickest. So again, that's why I know sometimes I beat up these stocks if they're overvalued in the numbers, and I get upset to try to compare them to undervalued stocks that we looked at. But again, I understand Tesla is slightly an anomaly, kind of in its own category. However, numbers don't lie. The company has missed on the revenue side, as I showed, the last 3 quarters in a row. We have a gap fill back here again, 81, 87. So again, you want to tell me it fills the gap, and then, over 3, 4, 6 months after that, it runs back up to 200 and change. All right, fine. But it has to fill the gap. And that's basically the point I want to make here in the video. And again, look, the more the NASDAQ has chunked down, look at Tesla now. Look at Tesla now. It just will continue to slide. It will continue to slide. Because not only is it overvalued, but again, it was in an ascending wedge, which is a bearish pattern. Plus, it had multiple gap ups. So you have a list of realistic reasons as to why this stock is breaking down right now. So after everything I said, if you're sitting there like holding Tesla and you're like, yeah, I don't understand why this is down 6%, it should be flying to the moon, shame on you. Because what goes up must come down also, right? Can't just go up forever. But hey, market just closed right there. Stocks took a big hit. Everything turned red there. And that's what I'm saying. At the drop of a hat, I'm telling you, at the drop of a hat, because it always happens the same way. They act like everything's okay, everything's stable, you got nothing to worry about. You go all in with your cash, you're holding whatever, some puts, you got calls on this stock, you got shares on this company, you're involved in this REIT, and then what happens? The shit hits the bed, you're fully invested, you have no cash, you watch your portfolio just consistently bleed. There's nothing you can do. If you want to potentially take advantage of a short-term trade idea to make back some of the losses you just took, what are you going to have to do? You're going to have to sell a position in your portfolio for a loss to try to make up for other losses, right? That's the snowball effect. And that's how, even if you've been on fire for the last year or so, let's say, that's how you take an account from a couple of thousand up to 10, 12, 15,000, and then it just starts to crash back down, and before you know it, you're back at 2,000 or 3,000. And it just wipes out all of the hard work, all of the research, all of the discipline that you may have had for the last 12, 18, 24 months, wipes it out in the blink of an eye. So I just want everyone, like I always say, to stay sharp and stay focused, right? But now we're beating a dead horse. So once again, stocks by the numbers. I want to thank you guys for stopping by. Wait, did we look at stock charts? Look at this here on the daily. Again, I mean, up at 90 on the RSI. Only Tesla could do this, right? Only Tesla could do this. Any other stock that would have broken up above a moving average and then the RSI popped up to 73 or 75, they would have immediately pulled back and rejected and sold off a couple of dollars, right? But not Tesla. It just rages. It stays above 70 RSI basically for the entire month of June before now recently hitting that apex of the ascending wedge and pulling back. Mid-Bollinger Band 237. What was the other gap fill right here? 235, I want to say. So that's why that, in my opinion, is inevitable. And look at all this action taking place over here down in the 190s with all these moving averages. And, of course, the bottom Bollinger Band now curling up, climbing up to the stock since it obviously has rallied in the last 3.5 weeks. So that's why a pullback to like 200, sub 200, in my opinion, definitely overdue. But, of course, if you look over on the weekly, you can see that the RSI really never got that high. So that's why for longer-term investors, I can understand if they like jumped in and rode this wave up, feeling that there was more room to go, right? Kind of understandable. However, again, MACD kind of just climbing up to the moon here, basically since the ball dropped for this year. So, you know, I really think it's only a matter of time before Tesla slows down. And again, I understand if you own it, you might want to debate with me a little bit in the comments section. Of course, I welcome it. I have an open mind. I'm always open to, you know, different viewpoints and everything like that. But, you know, again, you can't deny the company missed revenue 3 quarters in a row. 3 quarters in a row. And again, the beginning of the year it was at 100. And it recently almost hit 300. And they're not beating estimates, right? That's what I'm saying. We have companies like Fubo that have been beating revenue, and yeah, they had big rallies, but nothing like this. Almost 200%? Come on. Let's be serious. But again, RSI got out of whack. Could only happen with Tesla. MACD, of course, recently crossed since the stock has been pulling back, and now we're coming out of this ascending wedge. We have multiple gap fills. So there you go. There's Tesla in a nutshell. And I'm going to end it there. I don't feel like talking anymore. Once again, stocks by the numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Just like everyone on YouTube says, thumbs up, algorithm, share the video, helps me get more eyes on the channel. Greatly appreciate all you guys doing that for me. And, of course, handshake agreement, right? You want me to give you an update on Tesla? Let's take a look at this ABC stock. People are saying it's going to be good, or we're seeing some shady movement here in XYZ. What do you think? Fine, no problem. You want me to analyze any of these stocks? You want to come into Discord? You're looking for potentially some little short-term trade ideas? No problem. I have no problem helping out any and all of you. All I ask, handshake agreement, right? If you watch the content and if you absorb some of this knowledge and you even potentially make a couple of dollars off of whether I say something's undervalued or overvalued, listen, all I ask, push the subscribe button. That is our handshake agreement. That is how you help me help you. But moving forward, like I always say, I understand that markets are rocky and they're volatile and they're uncertain. So I want to wish everyone success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day, guys.